Many of you enjoy watching my two undervalued stocks to consider video. This is a video I do every single month about two cheap or undervalued stocks. But sometimes I do talk about my watch list, and this is a trick that I have that most people do not even implement in the market. Most people do not have a watch list with price alerts set for their favorite stocks whenever they go on sales. I talk about these stocks sometimes, and people tell me, why do you talk about them? They're so expensive. Well, they might get cheap next week or in 2 weeks from now. And if you're distracted and you don't have price alerts at your fair value, you might not get the opportunity to buy them. And I did buy so many stocks just because I had the Yahoo Finance watch list with price alerts on my favorite stocks at my exact fair value that I'm willing to buy these stocks at. I did share 3 stocks with you 2 months ago. Only one of them hit my price alert and I did something on it. And this was Otis Elevators. I talked about Otis in the video. My price alert was around $75. The stock went to like $73 on earnings. Then it recovered during the day. It's up over 19% since I set up my price alert on it. And if it wasn't for my alert, I would not have known about that Otis hit my price alert. So sometimes you get distracted and you might miss opportunities. And in this video, I'm going to share 2 of the stocks that are currently on my watch list that I would love to buy at the right price. I'm going to give you a very quick analysis on them and give you my fair value or my price alert on them or where I'm intended to exactly buy them. And I think you guys are really going to enjoy such video. Now, the first one, which might surprise many of you because it became some kind of a controversial stock. Some people love it, some people hate it. And this is Starbucks Company or Starbucks Corporation. And it's not talked about a lot on YouTube. And I'm not sure why, even though Starbucks has an amazing repeat business model, recurring revenue. Every single day, people buy these coffees, or every few other days, people like to go there. A lot of young people. I'm not personally seeing this trend going away anytime soon, despite other competitors like McDonald's trying to enter the space. So I'm not seeing such a threat to Starbucks moat, and I believe Starbucks does have a moat within their own brand, within their own kind of loyalty brands and many other things that they're doing. So I like Starbucks. I'm going to tell you why I like it in the video, and it's going to be pretty interesting. Now, one of the reasons why Starbucks has been struggling, one of them is from lower margins. Their margins have been a little bit suffering because of higher commodity prices, higher cocoa, and many other kind of commodities that they use to make these coffees and drinks and many other things. So one of them is lower margins because of commodities. The second one is just lower demand in general. This is an amazing way to show you the demand. And if you're a Starbucks fan or customer, which I'm not, I mean, you could know about Red Cup Day. This is some kind of a day every single year that Starbucks has, whatever they give people free cups that they can refill them or something like that. I don't know. I had to Google it. I'm not a fan of Starbucks. I don't consume the product. But this is what, I've seen on it. And it's a day that people enjoy going to. And it tends to increase traffic in those stores. For example, in 2020, this day led an increase of 74%. In 2021, it led something like a 65% increase. 2022, 81%. 2023 was only 31%. And this could be due to many different reasons. Maybe there's more competition, although I'm not seeing that much competition. Maybe people like something else. It's possible. But I think it's mainly just lower disposable income from higher interest rates that we have. Student loans are resuming right now. People are paying student loans. They can't buy and do all the things they used to do just a few months ago or a year or 2 ago. So this has something to do with it, in my opinion. But despite that, Starbucks is still putting up decent numbers, over 8% global comps in this macro environment, which in my opinion is pretty good. If you think about it, 2022, yes, was astonishing, but 2023, for a company that people believe is mature, is still growing 8% comps and 5% in China, which is likely going to increase in the future as the company does more things in China, open more stores, and they're working a lot on their China plans. If you listen to the Investors Day, they're doing pretty interesting things in China and outside the United States. So again, 8% comp sales is nothing to brag about, but it's not bad at all in this environment. Now, if we look at where the company is trading at, it's trading around 23 times forward earnings. The mean was 29 times. Over the last 10 years, it traded as low as 19.5 times and now sitting at 23 times. So it's much lower than the historical average and is closer to the low of 19.5 times, which would lead me to believe that investors may not be liking Starbucks too much in this rally. And if you look at the stock in general, it hasn't really participated in any major way. It's still flat at the same price it it was trading at in 2021, even I think at the same price it was trading at in 2019. So the stock has been pretty much flat for around 4 years, even though EPS has been growing more than double digits and the company was getting better. And this is why I believe Starbucks is very close to becoming a buying opportunity for my portfolio. I'm going to tell you exactly at what price I'm interested in very, very soon. But I mean, I like Starbucks so far. I think at 23 times earnings, it's getting pretty close to fair value for me, especially if you look at the return on capital for the company, over 29 to 33% return on capital. They do a lot of buybacks and they pay a dividend, shares outstanding coming down. Pretty amazing stuff, investing for growth also. If you look at the analyst estimates for forward GAAP EPS growth, it has been growing EPS something like, I mean, before that it grew a lot, something like 26%, and it declined in 2021 around 20%, which was for 2020. But in terms of 26.5% growth in 2023, 16% in 2024, 16 in 25, 21 in 2026. Maybe not, these numbers are not accurate. But if Starbucks can just grow 15%, like much lower than these estimates, this would qualify as a stock for my portfolio, as I look for a minimum of a double every 5 years, which is a 15% return every single year, especially if I could buy it at the right price to earnings ratio. And I'm going to tell you exactly what it is here very soon. In terms of the company's guidance, they still expect over a 15% long-term EPS growth, earnings growth. Now, I'm not sure if the company can deliver on that, but 15% sounds pretty good to me. They've been beating that, many, many times. If you look at the analyst estimates and their previous earnings, I mean, if you look at something like the EPS or net income, EPS, they've been pretty much beating every single quarter except one quarter by double digits kind of beats. So I think the 15% is not out of reach. I think it's pretty realistic, and if they do grow around 50% minimum, then the stock could double every 5 years, excluding dividends or anything, like a multiple expansion, which sounds pretty good to me. And for me personally, my buy price on Starbucks, the price I'm willing to open a small position at, and dollar cost average down, is somewhere around $85 per share. If Starbucks gets around $85, around this circle, 85, $86, 83, 84, in the 80s, low 80s, mid to low 80s, I would be extremely interested in Starbucks. This is, outside of any major earnings revision or anything major that happens with the company. So if something really major happened, I would have to lower my fair value. But if everything is still the same, as the market overreacts to the downside, I think low 80s is a fair value for Starbucks. And I think in this case, we would have some margin of safety and get a minimum of a 15% return or something like a double every 5 years. So I really like Starbucks here. A lot of you asked me about McDonald's starting some kind of a, brand to compete with Starbucks. I mean, to me personally, it could work, but for me personally, I don't think it's going to work because people have a certain perception of McDonald's and they're trying to get into coffee, and people like Starbucks as some kind of a premium brand, and they're going to look at McDonald's as some kind of a cheaper brand. So I don't think it's going to work. I don't think they're going to affect Starbucks. People already buy, cheaper coffee at the gas stations and stuff. They might go from the gas station to McDonald's or whatever McDonald's trying to do. But I don't think they're going to switch from Starbucks to the McDonald's brands. This is just my own personal opinion. I could be wrong, and it's going to be interesting to see what happens. But I don't believe this company, McDonald's, is going to create some kind of brands that's going to take over Starbucks. And I hope the stock crashes on these kind of perception, because I believe it's the wrong perception. And I think Starbucks has a strong brand and it will likely thrive. So I'm a Starbucks stock fan, and I would love to buy it in the low $82, $83. Now, the second one, which is very, very short introduction, which needs no introduction, is Microsoft. Microsoft, I would love to buy it around $315. If it gets to $315 or below, it would be an amazing buying opportunity for me. I keep, increasing my price target because the company keeps blowing me out. It keeps over-delivering. It's been, it's a $2 trillion company or $2.7 trillion or something crazy. And it's still growing EPS 50%. It even grows something like 40% in 2021, 2024. Now it's growing around 14%. Next year is expected to be 15% for the next 4 to 5 years. They're doing a lot of things with AI, amazing business model. And it's going to keep growing 15% for years and years to come, which satisfies my minimum of a 15% annual return. So all I have to do do is to make sure I don't overpay for Microsoft so I don't experience a multiple contraction. And for me personally, 315 is still a little bit of a premium for something like Microsoft, but it's not a crazy premium. It's something I would open a small position into and dollar cost average down, because I don't believe 315 is a bargain. A bargain for me on something like Microsoft is like 260, 250. I think this is a pretty decent bargain on Microsoft with the current earnings growth if they keep it up. But something like 315 is a little bit of a premium, which is why it would be a very small position for me, and then I can dollar cost average down and lower my cost basis below 300. So this was my, pretty honest opinion around these two stocks. I like Microsoft. I like Starbucks. Starbucks for me is below $85. Something like Microsoft is below 315. This was my analysis on it and what I'm planning to do. I'm not obligated to do them. I share what I do in my own investment group if you're interested in joining. But if nothing major changes with the company, I will most likely be buying either Starbucks or Microsoft at these prices. So consider doing a watch list. It might help you make some money. And it was not financial advice. Thank you for watching the video. I really hope you enjoyed it. So if you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.